Hello and very warm welcome to the home of high probability trading. My name is Tim and I'm one of the traders here at the live trade room. And we're about to trade the US Open fully live and interactive. Just before we get into it, for those of you who are genuinely interested in learning how to trade the financial markets, we can certainly help you as an organization. We've got a wealth of resources available from you, from daily live trade rooms through to education and trading tools like our risk management software. And we really do offer traders kind of a comprehensive daily support in these markets. Obviously, they're very challenging environments, and I'm sure a little bit of help and support along the way would probably help you out quite a lot. And we do all this at very, very low cost. That's something we can absolutely charge an awful lot more for our products and services. But we trade the financial markets live with our own capital every single day. And we just simply don't need to. So we're going to offer you a great opportunity to join us completely at a very, very low cost. We have membership packages from as little as just $19 per calendar month. So for more information, just go to our website, which is thelivetraderoom.com. For more information, there's a chat function there as well. So if you've got any questions about trading these markets or you want to speak to one of our traders, then feel free to get in touch and we'll be happy to talk you through that. Okay, so let's get straight into it then. We'll start with our risk warning and let's see if we can make some cash for the session. So please take a brief moment to familiarize yourself with our risk warning currently up on screen. And we start every trading session really with a quick review of some of the market moving news. And as you can see, there's nothing of any significant importance today in today's calendar. But what I do want to do very briefly is to just take you back to what happened on Friday. We had a very, very volatile trading day on Friday. It's all off the back of non-farm payroll numbers. As you can see here, the US economy and the powers that be, the forecasters, the financial institutions, they're pretty much priced in, and we're expecting about 1 million jobs to be added on Friday lunchtime at 1:30 UK time. So they're expecting close to 1 million jobs being added. The reality was, we've seen a very, very significant miss. So we only, in the end, and this is the government's report on the jobs figures, by the way, they saw 266,000 jobs added. In normal circumstances, that's a very, very good non-farm payroll number. But when there's an expectation and prices are built in for close to 1 million, that's obviously a very, very significant miss. In addition, we've had the unemployment rate actually go from 5.8% up to 6.1%. So actually unemployment is going up. So none of this makes any significant sense to any great, economies are opening up, businesses are coming back online, but there's obviously issues with this job number. So how do we interpret this information? Because it does at least create an environment which is a little bit more decisive now, believe it or not. So for most of last week, markets were kind of moving in this sideways moving pattern, and it was doing so with a bit of fear and trepidation. Janet Yellen last Tuesday made a reference in an interview that of course the Fed will be increasing interest rates. And if you look at price action and you look at some of the charts, the markets were really quite rattled by that. So it is a bit of a schoolboy error on her part. Now, she very quickly tried to correct it, but unfortunately it was too late by then. Because broadly speaking, there was an expectation for the Fed to start tapering their bond buying. So their bond buying program, which is quantitative easing at its most extreme ever in human history. So the numbers are really quite staggering. So there's an expectation for the Fed to perhaps follow, the BOC, who tapered their bond buying program by about 25%. There was a lot of rhetoric about perhaps the Fed becoming a little bit more hawkish in their views in terms of when they're likely to increase interest rates. So all of this came to an abrupt end on Friday. Because of the jobs number, and unemployment is a very important, it's crude, but it's a very, very important indicator in terms of economic health. Of course, if more people are in work, they have more money in their back pocket and they're out spending more into the real economy. And as a result, that gives the economy a bit of an uplift. But because the jobs number was nowhere near as per expectation, it was a very poor non-farms payroll number. It's probably the most extreme deviation again in history. So we're living and we're trading markets in very sort of strange and unusual times at the moment, where we're getting a lot of indicators that are almost contradictory in their nature. So we have to build that into our approach, of course, when we trade these financial markets. However, we now have this element of clarity, I guess, in these markets, because as a result of the unemployment numbers, the Fed are very likely to maintain their bond buying program at the current rates, and as a result, interest rates are likely to stay put for longer, which is really what the Fed have been saying. The Fed have been telling us that there's that any sort of inflation we get is going to be transitory, and they're not too concerned to the upside. Most of us trading these financial markets and living everyday life will know that prices seem to be increasing at a very significant rate. Yes, in some parts of society and sectors more so than others. Nonetheless, there seems to be a very real uptick in inflation, and that's really ultimately the concern for the Fed in terms of their approach to rates. So how do we compute all this? We put all this together, and we're of the conclusion now that it does give the indices markets a green light to push higher, and it also gives basically a green light for the dollar to continue to weaken, and the yen as well. Certainly against the majors, will be looking to weaken as well. So that's the good news. We now have a little bit of clarity. We haven't had too much clarity for the last 4 or 5 weeks. And on Friday, as of Friday lunchtime, basically after lunch, then we started to see these movements, these markets sort of kick into action. So with all this in mind, let's bring up our charts. And there's something that's worth noting, really. If I bring this currently... Oh, sorry, let me go back and bring this up. So I just want to use this opportunity. It is a Monday, so we absolutely do have some very interesting opportunities in the pipeline. But I just want to draw your attention to something briefly, if I can. Something that's worth notifying. Yeah, good afternoon, Finbar. I hope you're well. I hope you had a good weekend. Good to have you join us. So when trading financial markets, certainly we are breakout traders, we are momentum-based traders, so we need to determine what momentum is and where do we find it. And that often guides us in terms of opportunity and trade selection. So we've got a way in which we do this. Every month we publish our monthly trade plan webinar, and it looks at big picture multi-time frame analysis, which allows us to just take a step back from these markets, really scrutinize the opportunity, and then it gives us sort of a little bit more clarity in terms of where we stand. So I spoke about Friday's event and what the reality of that particular event is quite bullish for equities and quite bearish for the dollar. So what we can do is we can work out where the momentum lies by just looking at the multi-time frames. So for example, those of you that have been frustrated with trading the dollar last couple of months, this is the reason why we've had retracement moves. So if you go back to March, we had an awful lot of selling. April, we've had an awful lot of buying. So you've got this retracement. You don't really get that follow through that we talk about in trading markets. So as a result, we've not been that active on the euro dollar. But look what's happening now so far this month. Markets pulled back off last month's high. We've opened up. We attempted to break through the 120 to the downside. And as we keep saying regarding the euro dollar, we're looking for opportunities to sell below 120. And we'd be looking for opportunities to buy above 120. And that's really where we're at. And this is a good example of that price action in real terms. So prices bounced off that 120. We did break through sort of on a few occasions, but actually the move has prevailed to the upside. And if you can see it, I mean, maybe we look at it on the weekly instead. So you can see that this is Friday's price action, just breaking through the previous month, the weekly high, and breaking through that monthly level to the upside as well. So the move has only just occurred. So we had been drifting sideways with some significant moves higher and lower over the last 3 weeks, and now as of Friday's news event, we are now pushing to the upside. So what we can do is we can almost categorize the opportunities according to whether they break above very, very significant levels of support and resistance. So we can almost see where the momentum lies. So it's worth going through this on occasion. Like I said, we do it as an organization every at the beginning of every month. So we do this analysis. It's called our monthly trade plan. So we talk about monthly highs and monthly lows quite a lot, so we can see where the momentum lies. And we can see the overall trend of the market as well. So all of these things fall into play. So we can see Friday's in the euro dollar. Friday's move was really quite strong to the upside, and we got that green light for some dollar weakness that we've been talking about for quite some time, and that's what we saw in when we talk about momentum, we're talking about price and volume. Prices are pushing higher with significant volume that we've now sort of broken through. I'll just turn I'll just turn that off just there for a second. So when we talk about momentum, we want price and volume, and we want these markets to be somewhat coherent, and we're actually now finding that's the case. But we've only just, as of Friday evening, really, we only just broke above the monthly high. So we're trading around the monthly high as we speak. Now, some of these dollar pairs are in slightly more advanced positions than others. So the pound dollar, for example, Friday's trading, it literally bounced off the monthly high, which is why we look at this level. It also coincides with the 140 level, which is a psychological level. And overnight, really, prices have really been driven to the upside. So a fantastic trade to the upside for the pound dollar, as you can see. So it's in slightly more of an advanced position in these markets, and you can see where it fits in. We're continuing the uptrend, but it is now a green light to the uptrend. So, and as you can see, the move has only just started today. So it can become very, very quickly just a very simple, straightforward opportunity that we are now looking for some pound strength against the dollar. That's to the upside. So the momentum and the direction and the opportunity is clear to see. Plus, you might be familiar with the situation in the UK, with the political situation in the UK, where we now have we've had Labour losing some more seats. And what that does is that gives the government and government policy a little bit more of a green light to continue its trend. So broadly speaking, it's generally positive. Instability creates a bit of, let's say if the Labour were on the verge of overthrowing the Conservative government, then we'd be looking at the pound in a little bit more of a bearish, with a bearish aspect to it. But because we are, we've got, the Conservatives are effectively taking control, it does provide more stability. So as a result, the pound is seeing a significant uptick. Oh, of course. Sorry, Finbar. Yes, the live date, it says the 5th of May. Of course it does. Sorry, that should have said obviously the 10th of May. I don't know if I can change that. Yeah, we try and get in and change that. So that would explain it a little bit. So apologies for that, 5th of May. We need to, I'll just get that changed now. Right, hopefully we get that sorted pretty soon. So thanks for that, Finbar, appreciated. Okay, David, yeah, you're about to lose blood on the pound Swiss short. Yeah, we were looking at this last week, weren't we? Very quickly, look, the pound is by far the strongest currency over the weekend. As you can see, it's accelerating across all majors. So yeah, you had a short. Yeah, we were talking about that important level, and you just compare it and contrast against the dollar and the Swiss. The Swiss is only just mildly. So unfortunately, guys, the trading gods are not good to you on that one. The only thing I can suggest is, and it's more of a learning curve really, but if I just get up my pen. So I'll come back to that, just analysis in terms of momentum and which market should we really be focusing our attentions on. So what we had, I don't even know where the monthly low is on this one. So let me just find that one out if I can. Yeah, so this is the monthly low just in here. So let me turn that red so you can see it clearly. So so we just marked the monthly low to 125.93, and you're quite right, we would be looking to sell below that level, the 125.93 level, and it's below the 126 as well. So and there's this bearish aspect to this trade, isn't there? So there's this sort of little channel to the downside. Now the fundamentals over the weekend, as far as the pound are concerned, you know, we're very bullish the pound now. So we've had a complete change. So I'm not surprised that perhaps you were looking at a bit of a sell trade at this level, but Friday's price action really kind of reversed that trend pretty quickly. So what it became, and you've got to squint really at this one, because we've got the monthly low. This Thursday's selling failed to close below that level, so we want two things before we engage with a trade. Sorry, I don't know what's wrong with our camera. There's something wrong with it. Okay, having one of these days for whatever reason. So what we need to see is a close above or below a particular level of support and resistance, and then we need to follow through. And unfortunately, we don't get any of those with this trade. So there's our low. We look at this candlestick and think, right, well, yes, we've now got the momentum to the downside. Prices are clearly pushing lower, but do we get a close below? No, we don't. And do we get the follow through trade the next day? No, we don't. And all that does is just give opportunities for buyers to come in and start pushing prices higher and start squeezing people out of the trade. So yeah, a bit of a tough one, but technically speaking, I can understand why you guys would be getting in around these lows. It's not a market we trade. We don't trade. Sorry, I don't quite know what the problem is with our camera. Okay. So I think we're there now. So yeah, that's a bit of a tough short, that one is. Yeah, it took your stop. Look, at least you're trading with stop losses, because there's lots of people that are not trading with stop losses. I don't know why they're not trading with stop losses, David, but they're not. So at least you're trading with a stop loss. And as long as you can predetermine how much risk you're committing to a trade psychologically, hopefully that should help. As long as you're not taking more risk than perhaps what you should be. It can be uncomfortable if your exposure is a significant percentage of your capital, for example. That's a tough place to be. So I hope you've calculated your trade size. It's something we talk about to our traders all the time. So it took your stop. Okay. I see what you're doing, David. You re-entered the short, though. You hope you don't lose more blood. The likelihood is right now that's exactly what you're going to be losing. Can I ask you why? So when we get into a trade, we want to make sure that we have reasons to get in. What reasons do you have to sell this trade? And do those reasons sort of add up to a high probability trade? That's the kind of thought patterns we would look at. We're bouncing off a monthly low. We've got significant volatility to the upside, and yes, there is lots of traders that try to sell the highs and things like that. Maybe that's the type of trade that you're looking at. But for us, really, there's very little reason to be selling this market. Yeah, so what happened over the weekend? Yeah, it's all really to do with the elections over the weekend, where the Labour government lost a few seats in the process, and with the local elections, and I suppose the Conservatives had more of an increased foothold on power in the UK right now. So all of that thing, plus as well, if I take you back to the news event, sorry guys, we'll get on with the trading now in a second. I can see we're 15 minutes away from the open. We had really positive news last week as well for the pound, but we saw initial selling, which again is just a bit frustrating, isn't it? But no, I've gone too far now, haven't I? I think. No, I haven't. Let me go back. So that news event is where we had very positive news last week for the pound. And I'm trying to find the event, and I can't remember which day the event occurred. Such is life at the moment. So maybe it was early last week. So the BOE we had last week, which was again maintaining its quite supportive stance. I can't recall the news event off the top of my head. It was just a conversation we had internally about, potentially a a fairly bullish pound. That with the political situation is where the opportunities are lying right now. So I would be concerned about a sell trade at these levels. Yeah, and of course with Scotland as well, they're wanting independence, aren't they? So, but I think that's pretty much nipped in the bud now as well. Yeah, so do you believe keeping on the side of the strongest currency increases probability? Absolutely. Trading foreign exchange, and I know there's lots of operators out there and educators and stuff, but it's simply trading the strongest currencies versus the weaker currencies. And if you can identify what those are, then that gives you the higher probability trades. And that's why we do some on-screen analysis. You know, if you're looking at the pound Swiss, you know, you can look at it against the dollar. There's the strength in real terms in front of your eyes, and there's the strength of the Swiss. Now they're both strong, but the pound is so much stronger than the Swiss. So really, in today's trading, it should be all about the pound dollar. So you're absolutely right, and probability is exactly what trading's all about. Okay, good. So you control your lot sizes, which is fantastic, especially when you're starting out. There's no need to add that pressure of increased trade size. So the supply zone of the current bullish candlestick on the daily wicks into that area on the hourly. Okay. So when you talk about supply zones, when you're talking about currency, the current bullish candlestick on the daily into that area on the hourly. So you're looking at some sort of resistance and then some sort of fade where you're getting a bit of a rollover. It's fine, and you know, I know traders that do sort of look to trade like that. They're just riskier trades. They're just quite tough when you're kind of starting out to be able to formulate that on and we talk an awful lot as well, David, of just about being consistent. So if that's the type of trades you look for, there's nothing wrong with that, but you become very, very good at those types of trades. Yeah, you try to see the highs. So there's lots of traders that do sell the highs. We look for the pullback to the upside, whereas you'd be looking for the sell of the high, whereas we'd be allowing it to come back to get the next leg higher. So it depends what type of trader you are. We know exactly what type of trades we look for. We look for breakouts. We look for pullbacks to support and resistance. And that in our head just makes trading a little bit simpler. It's a little bit easier. It can be a bit of a minefield, especially when you're starting out. Yeah. Yeah, I know, David, Nico, Amalana. Yeah, we live in a bit of a strange world. Who would have thought Donald Trump would have been? We would have seen 4 years of him being the leader of the free world. It's quite nice having a bit of calm now for a change. It's weird. It was. Yeah, the UK has gone full conservative, and America's gone full Democrat. Yeah. Like there's still an awful lot of resistance on you know, from the conservative end. So I don't think we'll have seen the last of conservative America by any stretch, but certainly, you know, your more liberal policies are certainly threatening the status quo in the US for sure. Yeah, so in the DAX, Finbar to the upside, absolutely. Yeah, and we'd expect this momentum picture across most of the equity markets. You just got to be careful which markets you're looking at. Sorry, that's the DAX there. So this is a bit of a rollover to the downside. Again, the only problem you have, and there's I do see levels of potential support around this price. You've got a mixed bag across the equity markets today. So for us now, we're just going to sort of sort of bide our time. Really, we know that these markets have a bit of a green light to the upside, and but today is a selling candlestick. So, like, are you doing the opposite of David, which is David was selling the highs in the pound Swiss, and now you're buying the lows in markets like the DAX. The problem that both of you have with those trades is you're going against the momentum for the trading session or the trading day, let's say. And you might want to consider about trying to go, instead of doing that, to try to look at where the momentum is and looking to go with the market rather than going against it. Just a little bit of friendly advice, but it's very much down to yourself, of course. You just might find the processes involved in trading just a little bit easier, and it does mean you can discount certain trades. So sorry, I think I've covered a lot of your comments, so thank you for those. So let's get back into it, because what I was doing was a bit of sort of multi-time frame analysis and doing a little bit of hierarchy of focus almost. So really the pound dollar can be an absolute focus, and today is the day in which we're just breaking out above the 140, which is the monthly high. So, you know, if you're looking at this market thinking this is over to the upside, blah blah blah, whatever the case may be, no, it's just 100 pips to the upside, that's all. But we could expect, you know, much further upside in that trade. So you can see how some of these markets are trading firmly above the monthly highs, and you can see the markets that are not. The green line, keep an eye out in each of these for the green light to the upside, the green line to the upside, should I say, which is the monthly high, and the red line to the downside, which is the monthly low. You can see that the dollar yen is firmly in the middle of those two levels, so that this is not where the momentum lies. Dollar Swiss to the downside, absolutely. It's not quite as strong. It's not quite as strong as the pound, of course, but it's still a viable trade for continuation. And Friday and today we're only just breaking through that monthly low. So we can continue this process. You can see that this one was the first one to break, actually. It was the dollar CAD. The only problem is with a move like this on a Thursday, breaking lower, you would be taking a risk going into non-farm payroll. I don't know, Finbar, are you still in this trade? I know you were selling the dollar. In fact, we all were, but I think we booked in profit, I think, on this little rejection, if I'm not mistaken. And of course, it's just continued its leg to the downside. So the idea was to get into it below the 122.50. We didn't actually execute the trade ourselves, but I know many of you guys did get in again. So it was a viable trade for sure. So a really good move to the downside for that. So you can see it's progressing lower, and you know, we've seen the momentum perhaps on Thursday. The momentum today probably is not quite there. So did you get to book in a good profitable trade on that? So you can see how if you get a pullback into this little area here, then there's a really high probability sell trade again. Or if a floor is created around these current levels, and we currently flush through. Yeah, good stuff. Yeah, look, that's a great trade to the downside. So the dollar CAD. So the Aussie dollar, again, Friday's trading just broke above this level, and now we're seeing some continuation. Yeah. We had non-farm payroll yesterday, and you know, the problem with that is, I mean, hindsight is an absolutely wonderful thing in trading, but it doesn't really help us going into a major news event, which is non-farm payroll. And if we got Unfortunately, if we got what the experts and the forecasters expected, i.e. 1 million jobs, that would have been really positive for the dollar. You know, it's a good it was a really kind of positive event. Sorry, it would have been a really positive event if we got close to 1 million jobs being added. The reality was we didn't. We saw 25% of that figure. So as a result, you know, the dollar took a real significant hit to the downside. So it is a tough one, and conditions like that, you know, are really just a bit frustrating, to be fair. I mean, as you know, we were out of all of our trades going into that news event, and we would have done anyway, even if we were in profit on those opportunities. So the Aussie dollar kicking on to the upside. That's another opportunity higher. And those commodity currencies, we do like those to the upside, but you can see that the New Zealand dollar is not quite there yet, so we're not at that extent. Same situation for the euro pound. We've got sideways moving patterns, perhaps a break below the 8600, maybe give us some more pound selling tomorrow perhaps. And then we have markets like this, which is the euro yen. Whoops. Which is basically we had a break to the upside, which is now subsequently reversed. So you compare and contrast that with the actual breakout to the upside above the pound yen. So in our hierarchy, really, and I'm sorry, I'm just going through this online as well, so you can perhaps take note of it. We'd put the pound yen easily above the euro yen. Gold, you can see where this is. We had, again, on Thursday, unfortunately, going into that US non-farm number, we had some real strong price action in gold. Our bias is still very much to the upside. Not only are we breaking above the monthly, but we've also broken out of this sideways moving range. So around that 1800 level was the level to the upside. So gold. So this is a strong move higher. And we just finished these real quick. The crude oil, we've had some. We had sort of an uptick in gasoline supplies, and there was a viral threat. They had their servers hacked over the weekend, so there is sort of fears regarding I suppose the net position is that it can impact the supply of crude oil, so it might have been tampered with in terms of the I can't remember the phrasing that we discussed there, which was so they had their servers hacked. So so crude oil, it's trading at that monthly high. We would expect it to the upside, but it's not. We're not really seeing the follow through just yet. The S&P, we're at all-time highs today, and we are above these levels. So and The thing is with the US indices markets, they're not all at the same level. Nasdaq is actually selling off the back of Friday's push to the upside, and the Dow Jones is continuing to accelerate to the upside as well. So we've got that focus on US indices. We're above the monthly high, but there's some selling creeping into today's market. The DAX, we're not quite at that extent just yet, and same situation for the Nikkei. And Bitcoin is kind of trading in this little sideways zone as well. So we can look at the FTSE, even though things are pulling back today. So we can look at the S&P, the Dow Jones, and the FTSE market. So we're left with a few opportunities today. So we've got quite a few to ponder. So we'll refine this little list we've done. So we now know where the momentum lies. It lies with a weaker dollar, a weaker yen, a bullish gold market, and bullish US markets like the S&P, Dow Jones, and the UK's FTSE market. So those markets are where the momentum lies. Now what we can do is make some decisions in terms of where is the best opportunities for us as traders. So out of those, the euro dollar is just in this sort of sideways pattern. So we'll certainly look. I mean, we're certainly not getting any move just yet, but we'll look at that market to the upside. Definitely look at the pound dollar. Okay, we'll just focus on the dollar Swiss rather than the dollar CAD and the Aussie dollar. So we look at the euro dollar, pound dollar, the dollar Swiss, and the Aussie dollar to the upside. The market to focus on, as you can see, is the pound yen. So we'll have a look at that. Definitely gold to the upside, and the S&P is just rolling off the highs there. The Dow Jones is at all-time highs as we speak, and the FTSE market is taking a little bit of a turn to the downside. So we can have a look at the Dow Jones. So 2, 4, 6. So we've got 7 markets to look at there. Yeah, absolutely, David. The gold trade is you can see from Thursday, and we were just saying, when you have non-farm payroll, and if you can imagine, if we saw numbers that were close to 1 million jobs being added, that would have been really good for the US economy. That would have been really good for the dollar. And what you would have likely have seen would be the gold market selling off. But we didn't get that. So that's what makes trading a little bit more difficult and challenging at times. When you trade, you want to try and get the fundamentals behind your trade as well. We are technical traders, but we do want to get the wind behind the trades, and that's what can. And especially, we don't want to get offside with the wind. So, if gold is pushing higher, we'd want to be looking for buying opportunities, but we wouldn't buy gold going into non-farm payroll on Friday afternoon. Now the trade was post the event, as it was with a couple of the dollar sell trades. Those were the trades to get into, and gold to the upside. But this is pushing higher at the moment, largely due to the weakness in the dollar, because it's crossed with the US dollar. Okay, yeah, so the FTSE market, yeah, so we're looking at quite a few of these as well. So hopefully there's a bit of symmetry there for you. I've got 7, 2, 4, 6. So I tell you what we'll do. We'll take out the dollar Swiss and we'll just focus on the 6. So the euro dollar to the upside. Now I tell you what, we'll take out the euro dollar. We'll actually work with the pound first and foremost. Stick that in here. Then we will put in the dollar Swiss. We're seeing that momentum move to the downside. And the Aussie dollar as well. So there's our currency trades to the upside. And we want the pound yen to the downside. What I'm going to do is just stick on the squawk there so that you can, we'll see if there's any sort of market updates. So the so we've got the pound yen, we've got the gold market just sitting in here in the middle, and then we got the Dow Jones. Okay, straight away we have the Dow Jones continuing to make new highs. So let's get into this and we'll see where we're at. So there's your uptrend. This market is clearly not interested in drifting sideways. So I just change this to our intraday level. So we can clearly see these markets just inside this little sideways moving pattern. Yes, we are at all-time highs as things stand, and will we get the close and the continuation trade above that level? If so, there's probably a viable trade there in the Dow Jones to the upside. Okay, we're getting that little move now as we speak. So let's just see where this market closes and then we look to get in accordingly. So we'll see in the close in that in just a few minutes. So unfortunately this market has extended so high, we kind of need something constructive to work with. So we need a pullback trade around the 40-42. Around the 40-42 level. That's where we'd like to see this little pullback. So this has been a little bit more grinding. So this is a good example where you get a few little tempters just below that level, and they both fail, and then you get this candlestick in here. You think, right, we are now off, so let's get in below that level, below the low, and then look what happens over the next two trading, sort of the next half an hour effectively. It struggles to follow through, but it looks like we could be close to that pretty shortly. But if we do get this market just breaking below that level, then you got a clearly defined stop loss, and you got a decent trade to the downside. So it's the 89.96 level. $89.96. $89.96. Plenty more room to the downside as well. Okay, so we're getting in at these lows with this little breakout bit of price action. It's kind of slow and grinding to the downside, but we're going to get in beneath that low and place a stop loss just above the high. So we'll add to that. Plenty of room to the downside. We've only just broken Friday. We've only just broken the trade to the downside, and the dollar's still very, very weak. Okay, let's see where we're at. The Aussie dollar. So we know what direction we're looking to buy this trade. Again, this has been sort of grinding higher, really. We drifted sideways, so really we want a bit of a pullback in this, a 25 pip pullback if we can. So
just a reminder, we're 10 minutes away from the bottom of the hour, so we have comments from a Chicago Fed Evans, said to be speaking on CNBC.
Pullback.
Just a reminder, we did hear from voter Fed's Evans last week, saying policy likely on hold for some time.
So we're above the monthly high. So when we look at it at the smaller time frames, you could argue we've created a bit of sideways moving price action. It's pretty linear, isn't it? From last night, just continued to just skyrocket to the upside over the Asian session. So there was your high probability buy trade, 152.20, and now we're 153.46. So we're a lot higher than we would like to be. And there's your strong pullback or potential pullback to 152.20. What we'd prefer to do probably is to get into this tomorrow. So if it just, I mean, we've seen a nice accelerated move. Will we get a huge amount more today? Probably not. The likelihood would be that we would probably not. You know, we might get a small uptick, but what that will allow us to do is perhaps add to the trade tomorrow. So perhaps we can just monitor this trade for now. Probably a similar situation really to the pound dollar. We've accelerated for such a time now. So gold, we'll see where gold is at. So we've got this double top being created really. So above 18. So we had been looking for buy trades above the 1769 or 1789. Now we're at the 1842. 1842. So that's gold. Okay, so this market has had a bit of a, it's not looking quite so bullish now. However, the candlestick has formally made a new all-time high at 34,918. So we do have to, you know, bear that in mind when we talk about these grinding markets, that they continue to make all-time highs on a very, very frequent basis. So so you do have your entry above this level. And you got a technical, clearly defined stop loss just in there. So so really above the 34,909. Yeah, 34,909. Okay, so that's our trade plan for the session. Just make this a bit smaller. Excuse me. Right, so the pound is just continuing its very impressive move to the upside. So that's our trade plan for the session. So the pound dollar, looking for that pullback trade around the 40, 42. Unfortunately, up at these highs, it's you know, the market has gone too far, and how much more will we get in this move today? It's really tough to call. So generally, you know, we're a bit uncomfortable with prices up at these highs, so we can be patient. What we can do is look to get in on the pullback. Same situation for the pound yen, or if it maintains these highs, to get in on the open tomorrow, perhaps. So that continuation trade tomorrow is still on the cards. The dollar Swiss still to the downside. We just got into that trade lower. The Aussie dollar. So we do need a pullback in the pound dollar, the Aussie dollar, the pound yen. And this market's not too far away from that little breakout trade in gold. It just explains what phase the market is in. Okay, so if prices get above that 34,900 level, then that actually constitutes a breakout to the upside, a breakout in gold above that 1842 level. breakout sell trade below that 89.96 level. So that pound is super strong. It's just not giving us any opportunity to get into it, really. So look, that's our trade plan. I'll let you guys go if we can. We'll be back again tomorrow at 12 noon. So we've got quite a few sort of updates over the next few days. So we'll keep you informed on that, and we'll tell you about the new schedule. I think that's starting from next week, unless I'm mistaken. So hopefully a few interesting positive developments in the pipeline. Try and give us a thumbs up if you can. Do subscribe.
There need to see that inflation is anchored at target before they make big changes to policy.
Yeah, so they need to. That's an interesting sort of phrase, really, is that they need to see the inflation's kind of anchored. It's not so much transitory, that it's actually more real and an ever posing threat for policy to change. So that's an interesting development. Now, it's not an interesting development. It's pretty much what the Fed have always been saying. It's just the markets have not been working with it. The dollar Swiss, what's the stop loss? Yeah, it's just above this little handle in here. It's a technical stop loss, the 90.18 level. So our stop loss is at 90.22, always 2 times the spread above the high. So 90.22. And we're just expecting further continuation. You can see on the daily time frame as well, our stop loss is actually above today's daily highs. So what we would want to see here is continuation over the next couple of days. If so, we could make money on the trade. Okay then, so look, I do apologize. We need to shoot off at this point. So, oops, let me put that back. So give us a thumbs up if you can, and we'll be back again tomorrow at 12 noon. So subscribe to the channel and click the bell function as well, or bell notification. You'll be notified when we do go live, and we'll have some videos being posted as well from next week onwards. So some exciting little developments that are in the pipeline. So look, for everyone here at the Live Trade Room, thanks very much. Do take care, and we'll speak to you soon. Bye for now.